So we can see it's been a crazy month. Bitcoin is doing really nice, and it's really bullish if we can close above these candles. We see on the 1 month candles, these moving averages. If it can close above these moving averages, it has so much room before its next levels of resistance. Let's look at the big 5 years. Because if we see is pump, this bull run here from October 20th. So the next major resistance is around 35k, these levels here. So if it closes above these candles, closes above these moving averages, you can see it can just rise. But why? What has been happening? So we see one of the pumps that happened the other day was because the CPI was where it was meant to be. So remember, high inflation in the form of higher CPI naturally makes an individual unit of currency worth less, as there are more units of that currency needed to buy a given item. However, it may inspire interest rate hikes by central banks. And all this interest rates problems is what's been happening and why bank runs have been happening. Well, let's see some info. So meanwhile, CPI is known for measuring the degree of inflation in the economy, where the rise in inflation affects the diminishing standard of living for the residents. It tends to increase the price of goods with less manufacturing, leading to a huge loss of jobs. CPI has increased by 9.1% for 2002, beginning from June. So it speculates the higher the US CPI, the more pressure on BTC price, with the due effect on the US Federal Reserves. And that's what we've seen in the past. But recently, as it stayed strong, then people had more trust in Bitcoin. And generally, more people are seeing the use case of Bitcoin. And because if you're trying to store the value of your money for years and years, even over 50 years, over 100 years, on the banks, it's not going to work, because there's inheritance tax. If you try and do it in properties and other things, there's yearly tax on certain things. So it's hard for you to store your value of your money in the current systems of banks and all these kind of stuff. This is where crypto use case helps, because you can put your money there, you've got your wallet, that's it, it's there. There's no fines, there's no fees. You can give that wallet on, and whoever wants to inherit it can inherit it. No fines, no fees. So storing your wealth, we can see how Bitcoin has been a hedge against inflation, and people's value of their wealth has been able to stay great compared to traditional banking systems. But why are banking places also falling? Let's have a look. Because it's basically bank run is where people try to just collect all their money. But why were they collecting their money? So we can see a bank faces interest rates risks when the rates increase rapidly within a short time span. This is what is exactly happening in the US. Federal Reserve has been increasing the rates aggressively since March 2022 in a bid to control inflation. Feds has increased the rates by 4.5% so far. This has resulted in a commensurate rate jump. As per the AP report, the yield on 1-year US government treasury notes hit a 17-year high. So, for example, a 2% gain in a 30-year bonds yield can cause its market value to plunge by around 32%. So, in simple terms, interest rate risk leading to a drop in market value of a security is not a big problem as long as the owner can hold on to it through the maturity, and which point it will be able to collect its original sum without facing any loss. The only losses will stay hidden on the banks. But what is happening is customers at SVB, Silicon Valley, were out of their money and there wasn't enough money. So they did start selling at a loss. So the bank decided to sell 21 billion of its security portfolio at a loss of 1.8 billion. This drain on equity led the lender to try and raise over 2 billion in new capital. The call of the raised equity sent alarms to SVP customers who were already losing confidence in the bank and rushed to withdraw more cash. In this digital age, such a bank run can cause even a healthy individual bank to go bankrupt. And the bank crisis is not yet over. All banks face interest rate risk today on some of their holdings because of the Fed's rate hiking. And what's interesting is some banks wanted to be able to just set up where people could deposit their money, because remember, banks take risks on people's customers' behalf. But there were some banks wanted to come and you just put your money there and they don't take no risks, your money's safe. They're not going to borrow or lend or do anything. They're just going to keep their money. But Systems didn't want that, because if systems have that, then it's going to possibly bring down the economy, because with banks taking risk and driving the economy and buying and lending and all those stuff, it kind of helps the economy, can help the economy. But when a bank wants to be risk-free, governments don't want this. But now people in the decision of whether are banks actually protecting customers' money, or will crypto be better? I mean, let's see another explanation. So a bank run entails too many customers of a bank attempting to withdraw their money at the same time. This usually happens if customers believe their bank is about to fail. A bank run can turn a fear of insolvency into the real thing, since banks typically do not hold enough cash to cover all their clients' deposits. Bank runs have played a major role in financial crisis. So again, on the Silicon Valley, what happened? Because SVB customers were largely businesses and the wealthy, they likely were more fearful of a bank failure, since their deposits were not protected above a certain amount. So that required selling typical safe bonds at a loss, and their losses added up to the point that SVB became effectively insolvent. The bank tried to raise additional capital through outside investors, but was unable to find them. The fancy tech-focused bank was brought down by the oldest issue in the banking, and one of the few means that can surely tank a bank, a run on it. So what happens now? At the moment, experts don't expect there to be any issues spreading to the broader banking sector. There might be some pockets of instability caused by this, as seen in the dip the crypto market took on Saturday morning, but showed signs of recovery later in the day. S&P was large, but had a unique existence by servicing nearly exclusively the technology world and VC-backed companies. It did a lot of work with a particular part of the economy that was hit hard in the past year. Other banks are far more diversified across multiple industries, customers. So, and this is why even in your assets, you need to be diverse to protect yourself. So that bank is they were all focused on one area, but we can see there's so many coins I've talked about previously, and they're doing so nice. So we've got CFX, 156%. Now Bitcoin has a 3x. So if you've done a 3x on this, although there's risk in doing 3x, because if it drops 3 times the times. If it goes up, it goes 3 times the times. So it's not advice, but you would have had 4.5 what you put in. But even if you didn't do a 3x, you would have had 1.5 what you put in. 24 hours, 22%. The other one I was talking about, sand and stacks, you would have made double what you put in. So 100% of what you put in, you would have made that in the last 7 days, or in 24 hours, 12%. There's some other ones I've got. And GRT have been there delegating for ages. So GRT, although it's still far away from its all-time highs, we can see the market is looking very promising. Back at 1.2 trillion, far away from that 2 trillion we got to once, but we are looking strong. So let's have a look and a reminder of some of these ones. CFX. But make sure you subscribe. Make sure you check out my latest videos and my products. You can join the Telegram group. So 75% away from its all-time high 2 years ago. So remember, CFX Conflux is a permissionless layer 1 blockchain connecting decentralized economies across borders and protocols. Recently migrated to hybrid proof of work / proof of stake consensus. Conflux provides a fast, secure, and scalable blockchain environment with zero congestion and low fees, and improved network security. As the only regulatory compliant public blockchain in China, Conflux provides a unique advantage for projects building and expanding into Asia. So I remember that's why I like CFX, because they were regulated and approved by China. What was the other one that I've been watching? Where are we? Stacks. Where are we? So Stacks, update on Stacks. So in the last 30 days, 249%. So 2.4 times your money. 7 days, 90%. have a look. So Stacks latest news, GMX token keeps rising as crypto. I wanted to check out their website. Where are we? So remember, press subscribe. So Stacks, a Bitcoin layer for smart contracts. Create smart contracts and build decentralized applications on Bitcoin with the Stacks layer. So what have they got? Stacks layers grow the Bitcoin economy, proof of transfer, the consensus mechanism that connects Stacks and Bitcoin, allowing application to benefit from the security of Bitcoin. And then they've got Bitcoin DeFi. Stacks brings DeFi to Bitcoin, unlocking over 300 billion in capital and setting the stage for activation of the Bitcoin economy. Then Bitcoin NFTs. NFTs secured by Bitcoin are exploding on the network. So unlocking Bitcoin, growing the Bitcoin economy with Bitcoin layers. SBTC will allow the Stacks layer to unlock 500 billion BTC. So we can see why Stacks is really growing and pumping. It's got a lot of promise and a great use case built on the Bitcoin layer. Let's see if you've got time to look at the other ones that I've been looking at. So LQTY. These ads, let me press X on this. So LQTY, 30 days is done, 236%. Let's have a look, recap on why or what is it all about. So I'm using this computer. So 0% interest loans. With LQTY, Liquidity charges a small one-time fee to borrow LUSD instead of high variable interest rates. Remember, this is all the problems happening with banking, interest rates problems. Liquidity's efficient liquidation mechanism allows users to get the most liquidity for their ETH. Unstoppable stablecoin LUSD is a decentralized stablecoin capable of resisting all kinds of censorship. So they're all about lending and borrowing. So let's see. I think that'll be the last one I'll look at. I'm also being flow. That's been staying steady. Let's have a look at flow. And then sand and other ones, man and other ones. I've talked about that in older videos. So some of these virtual reality platforms. Very nice flow. Not sure if I've talked about flow in depth in videos, but we can see 23% last 7 days, still below 30 days. So flow, what is flow? Mainstream ready, utility driven, battle tested. Flow is a fast, decentralized and developer friendly blockchain designed as the foundation for new generation of games, apps and the digital assets that power them. It is based on a unique multi-role architecture and designed to scale without sharding, allowing for massive improvements in speed and throughput while preserving the developer-friendly asset-compliant environment. And one thing about Flow, I think, Flow is backed by Google's parent company. So that was one of the things why I was interested in Flow. Because the other one, AHP, All Can We Pay, that one was also linked to allowing Google Pay and other stuff. I was looking at what other cryptos does Google support. I think Flow was one of the other ones, and a few other investors. Google's parent company investors in a few other ones that's not well known, but Flow was one of the ones.